The United States has long been a dominant force in the global economy, leveraging its vast resources, technological innovation, and trade agreements to maintain economic supremacy. However, recent years have seen a series of aggressive trade policies that have sent shockwaves through international markets. The trade wars initiated by the U.S. against major economic players such as China, the European Union, and Canada were meant to bring back jobs, bolster domestic manufacturing, and reduce trade deficits. But what if these policies have created a backlash that threatens to destabilize the very economy they were designed to protect? The origins of the trade war. To understand the full scope of the crisis, it is crucial to examine how the trade war began. The roots of this economic battle can be traced back to long-standing grievances over unfair trade practices, currency manipulation, and intellectual property theft. In an effort to correct these imbalances, the U.S. imposed tariffs on billions of dollars worth of imports, particularly from China. The response was swift, with retaliatory tariffs placed on American goods, leading to higher prices for consumers and businesses alike. The immediate economic impact. Initially, there were mixed signals regarding the effectiveness of these tariffs. While some industries, such as steel and aluminum, saw temporary gains, others suffered significantly. Farmers, particularly soybean producers, were among the hardest hit as China, one of their largest buyers, turned to alternative sources such as Brazil and Argentina. Additionally, multinational corporations that relied on global supply chains faced increased costs, leading to price hikes for consumers. Small businesses were not spared either. Many companies that relied on affordable imports struggled to absorb the additional costs, leading to layoffs, reduced investments, and, in some cases, closures. The expected resurgence of domestic manufacturing did not materialize as companies opted to shift production to other low-cost nations instead of bringing jobs back to the U.S. The long-term consequences of the trade war. Over time, the negative consequences of the trade war began to outweigh the benefits. The uncertainty surrounding tariffs and trade negotiations made investors wary, leading to stock market volatility and reduced business confidence. Supply chain disruptions led to inefficiencies and higher operational costs for businesses across various sectors. Even more concerning was the diplomatic fallout. Countries that were once close allies of the U.S. felt alienated and began forming stronger trade alliances among themselves. The Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, emerged as an alternative to U.S. trade dominance, giving other nations a competitive edge in global trade. Even more concerning was the diplomatic fallout. Countries that were once close allies of the U.S. felt alienated and began forming stronger trade alliances among themselves. The Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, emerged as an alternative to U.S. trade dominance, giving other nations a competitive edge in global trade. Inflation and consumer prices. One of the most tangible effects of the trade war has been its impact on inflation. As import costs rose due to tariffs, businesses passed these expenses on to consumers. Essential goods, including electronics, clothing, and household items, saw noticeable price increases. Inflationary pressures reduced consumer spending power, slowing down economic growth. The Federal Reserve found itself in a difficult position, attempting to balance inflation control with economic stability. Interest rate hikes aimed at curbing inflation further strained borrowing and investment, exacerbating economic slowdown fears. The impact on key U.S. industries. Several key industries have been directly impacted by the trade war, each facing unique challenges. 1. Agriculture. The agricultural sector has arguably been one of the biggest casualties of the trade war. With China and other nations imposing retaliatory tariffs on American agricultural exports, U.S. farmers found themselves struggling to find new markets. Government subsidies were introduced to offset losses, but they proved to be only a temporary solution. Second, technology and electronics. The technology sector, heavily reliant on components from Asia, saw production costs rise sharply. Companies like Apple faced higher import tariffs on essential parts, making products more expensive for consumers. Additionally, the U.S. ban on certain Chinese tech companies, including Huawei, led to geopolitical tensions and further disruptions in the tech supply chain. Third, automobile industry. With tariffs on steel and aluminum, automakers faced increased production costs. While some attempted to pass these costs on to consumers, competitive pressure limited price increases, forcing companies to absorb losses. Major automakers expressed concerns about long-term sustainability in such an unpredictable trade environment. Fourth, retail and consumer goods. Retailers, particularly those dependent on low-cost imports from China, faced a dilemma: either raise prices and risk losing customers, or absorb costs and reduce profit margins. Many businesses opted for a combination of both, leading to store closures and job losses across the retail sector. The global repercussions. The U.S. trade war had ripple effects beyond its borders. Emerging markets that relied on trade with the U.S. and China faced economic uncertainty. Currency fluctuations, disrupted supply chains, and reduced investor confidence created volatility in global financial markets. Furthermore, the trade war emboldened other nations to adopt protectionist policies, leading to a fracturing of the global economic order. The European Union, for instance, took steps to strengthen trade relationships with Asian nations, reducing its reliance on the U.S. market. A political and economic crossroads. The trade war has also had significant political implications. Public sentiment shifted as Americans began feeling the effects of rising prices and job uncertainties. Political leaders faced increasing pressure to reassess trade policies, with some advocating for a return to diplomacy and multilateral agreements. Conclusion. The trade war, initially positioned as a strategy to strengthen the U.S. economy, has revealed unforeseen vulnerabilities and challenges. While certain sectors saw temporary gains, the overall economic landscape has been marked by uncertainty, rising costs, and strained global relations. As policymakers navigate the aftermath, the need for a balanced approach that prioritizes both economic strength and international cooperation has never been more critical. The question remains: can the U.S. recover from the backlash of its own making? Or will the ripple effects of this trade war define the next era of economic struggle?